This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Monday. Welcome back to another episode of Benzinga Live, and we have a lot to talk about today. I wanted to go ahead and start with what I see as what I see as the biggest headline today so far with the stock market is the China news. What's coming out of China? What's going on here? We will talk about that. Everything getting absolutely decimated. All the Chinese names. We were just talking about Baba last week. Granted, I was saying that I thought it had some good upside potential. Obviously, President Xi, if you want to call him a president, whatever you want to call him, dictator maybe, locking down the clamps in China. Let's go ahead and get our Benzinga Pro pulled up, and we can see the effects that it's having on Chinese names. Some of the other top headlines coming in the day: Tesla down, I think more than 5% or 4% still. Yeah, down about 4.5%. Tesla is, as you can see on the chart here. I mean, we can look at Tesla on a weekly chart, just getting absolutely clobbered. The news here, I think, is that people are speculating Elon Musk will have to sell Tesla shares at some point, either this week or next, somewhere in the $10 billion range, potentially. Let's go back to China real quick. Alibaba, down nearly 15% today. KWeb, which is the ETF that tracks a lot of the Chinese internet names, down more than 15% today. Oh, my charts aren't showing. That would help. That would help if I was sharing my Benzinga Pro. Don't let the mainlanders hear you, though. They be crazy. Who, the China mainlanders? I mean, I think there are. I think China has more of a obviously more of a control on its information and like propaganda arm than most countries. But China, like every other country, has young people there that disagree with their current government and whatnot. I don't think you see the same type of outspoken protests and whatnot because of what would potentially happen to those people. But you do have, I don't think it's every single like China mainlander is hardcore on it's the same as any country. But yeah, China getting absolutely decimated today. I don't know. I mean, the market's, when the market's telling you something like this, you got to listen. I don't think this is a time where you can come in and say, all right, I'm going to buy some of these names down here. Baba's a screaming deal down here, because the market's saying we don't want anything to do with this. And there's a reason for that. There's a reason the market's saying we don't want anything to do with Alibaba right now. We don't want anything to do with KWeb. We don't want anything to do with these names right now. I don't know. I mean, could be the China news could be in part why Tesla's down a lot. I saw a headline that Tesla's actually cutting its prices for its cars in China. So for the Tesla essentially uninitiated, a lot of Tesla's growth in terms of revenue over the past few years has come directly from China and its growth in China. Some people even go as far to speculate there might be something kind of nefarious isn't the right word, but something, I guess, kind of fishy with Tesla and China's like relationship. Because if you look at kind of the trajectory of Tesla's revenue and stuff, as soon as like the Tesla China deal was announced, there's been some things with Tesla's balance sheet, but Tesla announced that it's cutting its prices for its cars in China, which isn't good news, because if things are flying off the shelf, right, if demand is going up, you're usually not cutting prices into that. Elon has come out and said that he expects some sort of recession in China. So certainly, that can be part of why Tesla is down so much today. But again, you got to listen to what the market's telling you. I'm not coming in, and as someone who personally was praising, not praising, was saying I liked Alibaba as far as an investment. I like the risk reward. I'm off it. I'm okay to admit I was wrong on this one. I'm not saying there'll never be a time where I'm not interested in buying some Alibaba, but right now I'm not interested in it. And I reserve my right to change my opinion as the situation changes. If Chi steps down and someone else comes in who's more less authoritarian and more, you know, free market, sure, I'll buy some Baba. China's still a huge country. Let me catch up on the chat real quick. They're hardcore and scary. Luke knows what's up. But yeah, I mean, look, the Hunter Brandon. I don't know what's going on with the Hunter Biden stuff. Didn't he get like convicted? Isn't he going to the? I don't. Yeah, I don't know. I'll be honest. I don't really. I guess like the Hunter Biden stuff. Like I get it. I just don't really care that much. Like they always like the Daily Mail and all these like kind of like right wing tabloids try to like drag him, and they're like, "Here's Hunter Biden like on drugs and partying," and it's like, all right. Like a lot of that's what most people that grow up extremely rich end up doing. They're all a lot of them are fuck ups. I think from the, I don't know. Like Joe Biden doesn't have Hunter Biden in some sort of like important role, right? I know. Like I understand the like Hunter Biden using his connections, using his dad to like get these crazy deals and stuff. Like I'm read up on it. I think it'd be worse. I think I'd care more if Biden was also like, you know, trying to put Hunter Biden like in charge of shit and stuff instead of just, I don't know. Like the way I see it, like Hunter Biden using his dad and connections to get deals, like Eric Trump did the same. You know, like that's what people with rich parents and like powerful people do. All right, but I don't want to get sidetracked by too much politics today. Either way, that's the big news coming out of China. Why all these Chinese names are just getting absolutely decimated today. I'm hands off them. There are times you can come in and buy the dip on news where, you know, if some company's down 15% of the day, it can oftentimes be a good buying opportunity. Not for Baba. I do not see it as one. I'm not about it. Don't like it. Don't love it. How's the overall market doing though? S&P 500. We're looking okay. Kind of we've had some crazy volatile trading days. Today doesn't look any different. You can see here on the 5-minute chart, right where my cursor is right now is right around the open. Right here, 930, we shot up, went to about 370, almost 379 on the S&P 500, came all the way down to about 373, and then ripped back up. So now we're positive on the S&P 500 for the day, getting closer to that previous high a day. If we get back up to that 379 area and clear it, I would love to see that. And bottom line is, if we're looking at a 10-minute or 5-minute chart here, if we go to like an hour chart, you can see, I mean, we're significantly, I'm going to go ahead and say significantly off these lows that we hit a little bit more than a week ago. I mean, we're talking about going from in the 340s up to almost in the 380s now in the span of a couple weeks. So I'm not saying we're out of the woods yet, that the S&P 500 is going to go back to the 400s or whatnot. But just looking at the chart, looking at this hourly chart, this looks like to me, you know, kind of you got this bottom down here, a little double bottom, come back up. I wouldn't be surprised to see us keep moving higher there, especially if we take out this kind of previous resistance here right at 380. This will be a big area to me. If we clear this, if we get into this zone right here where my cursor is, above the 380s, I'm going to think we have room to run. You might say, oh, Aaron, you're crazy. There's all this shit going on right now with China, with inflation, with this, with that. I understand. I'm aware. Influence peddling using our vice president is an issue. What don't you get? I honestly don't know what that means. But the deeper you go, the more conspiratorial you get. Yeah, I mean, here's the line, and again, I don't want to stay on politics too much, and I'm not even like I'm not a fan of Joe Biden or the establishment Democrats whatsoever. I think both the establishment Democrats, establishment Republicans are, very, very much so corrupt on both sides, and that's basically my point. Is I don't think I just don't see. I think people on the left are like, oh my God, look at Trump and what Eric Trump and Donald Trump Jr. did, and I can't even remember his name. What's Trump's son-in-law's name? Jared Kushner. Look at all them. And then people on the right are like, look at Hunter Biden. It's like the same shit. Like they're, I just don't see like being any different. There was even this connection chart with Hunter and Chinese oligarchs. Yeah, dude. And I mean, there's just so much. I mean, there are people that are alleging that the Chinese government has something on Elon Musk right now, and that's why Musk is coming out and saying things that are like conceived as pro-China and pro-Russia, is because Musk knows he needs to. Urban Farmers Project is saying it isn't the same. Come on. My point was, I wasn't trying to make false equivalencies between the two situations. I'm sure there are differences, but my point was just that rich people on either sides of the political spectrum will use their connections to get favorable deals, to do these things. I don't really think there's any, thing nefarious going on with Hunter Biden. I think I don't know. But off that subject for now. I do want to check out some of the different betting stocks. A couple different betting headlines over the weekend. One I actually just wrote about this morning. So in the MLB world, Mattress Mac, kind of a famous name. So this dude, his name is Jim McIngvale, owns and operates the Gallery Furniture down in Houston, Texas. He's a multi-millionaire worth about $300 million, according to various websites. But he's famous for throwing out these massive bets on different sporting events. He has more than $10 million right on the Houston Astros to win the World Series. According to him, his around $10 million would pay out about $75 million, which would be the largest payout in sports betting history. Yeah, that's what I'm getting to right now. But here's the catch, and pun intended. We're talking about baseball, catch. This dude offers crazy promotions at his furniture store. So, for example, for this year's, on their website, it says, when you purchase a Tempur-Pedic, Stearns & Foster, or Sealy mattress sleep set at set price $3,000 or more, and the Astros win it all in the World Series, your purchase is free. Join us at any Gallery Furniture showroom today to make your qualifying mattress purchase for the chance to get it all free. So he offers essentially millions and millions of dollars in free mattresses. If the Astros win, he makes his money back with the bet. If the Astros lose and no one gets the free mattresses, well, people buy more mattresses so that they can get entry to potentially get it for free. The flip side to it is if they lose, it's all free marketing. Like, I'm talking about Gallery Furniture Store right now, which is some furniture store down in Texas that I've never been to. I'll probably never go to. But now if you ask me, can you name any furniture stores down in Texas? Yeah, I can name one. Gallery Furniture Store. So it's showing you his marketing scheme, his promotional scheme is working. And I don't know, numbers-wise, I guess, how much money people will really get in free mattresses if the Astros do in the World Series. But it's 75 million sounds like enough to cover that. Oh, AT's hopping in. You got thoughts on it, AT? No, urban farms. I know I didn't want to stay on politics too long, but I was actually curious what you meant by it isn't the same, because I'm sure other people were saying that from a different side, saying it's not the same, and that's kind of what I'm getting at, is that I think people on left would say, oh, the Trump stuff was worse with the family connections and nepotism, and I'm sure people on the right would say the opposite. And then, like I said, a couple different betting headlines over the weekend. You have Penn as well. I don't know. I mean, we're in the swing of things when it comes to NFL season, when it comes to, MLB playoffs. Basketball just started. I do think eventually some of these sports betting names become attractive. I want to wait, though, and see from a fundamental standpoint if the companies are able to cut down on operating expenses in terms of marketing and promotions, and really able to increase revenue without just having to spend. Because look, at the bottom line, you can talk about how much user growth, revenue growth, etc. you want, but if you're spending as much or more to acquire that user growth, or to acquire that revenue growth, then it doesn't matter. And all these companies are spending so much. I mean, it's like a running joke right now that if you turn on any sporting event, you're gonna be bombarded with different sports betting commercials. So when DraftKings, Penn National Gaming, Caesars, you name it, spends a bunch of money for these commercials, and then someone goes in and bets $5 to win $200 on their first free bet, they're not making that much money off of it. In other news, there was a kind of surprise, or I guess just unplanned, Department of Justice press conference at 1:30. We might try to stream it on this channel, but not really exactly sure what the subject is there. So that could be interesting and potentially market moving, depending on what the issue discussed is. Oh, some people are assuming it's it has something to do with the Twitter deal. I have seen that argument be made before, that the government would force that the U.S. government would force essentially Elon Musk to divest Twitter, as it could be seen as like a means of spread of public information, and not be. I don't know. I did see some people talking about how is it any different from Jeff Bezos buying Washington Post. Obviously, I think there are similarities to the situation. An ultra rich business leader coming in and buying, in Bezos's case, was one of the country's biggest newspapers. In Elon Musk's case, one of the biggest social media platforms. First of all, I do think there are people who, myself included, and I'm sure the majority of my, professors from journalism school and whatnot, were against both, right? That it's not good for Washington Post or for Twitter to be bought out by a, gajillionaire. I do think there's a difference, though, in terms of if you're talking about public information, the spread of public information and the power of public opinion, the effect that Twitter has versus Washington Post. I'm not saying Washington Post doesn't have influence or isn't important, but the way a newspaper operates, even in today's world in terms of online newspaper and stuff, that spread of or how information is spread essentially on that is completely different than Twitter, right? We know Twitter and other social media companies can have really, substantial power in terms of, oh wow, I didn't even see. Oh wait, Twitter's up today. Okay, can have substantial power in terms of how its algorithm allows information to be spread throughout its app. Yeah, there's hundreds of alternatives to Washington Post. There's not really, I mean, Twitter has an important spot in American culture as like a public discourse spot. And that's why actually, and this, why I agree with some sort of reform to Section 130, and talked about it a little bit last week. But essentially, like the argument you can't make the argument that for example like Trump, like when all the major media platforms took Trump out, and the argument for I guess the free speech argument after that was essentially saying look, you can't go on Twitter anymore, Trump. You can't go on Facebook. You can't go on YouTube, but you still have your freedom of speech. You can go out and publish, your own newspapers and disseminate it yourself, and go out to the street corner and say whatever you want. You could make that argument all you want that Twitter and all these companies are private businesses, so they can do what they want. But if you're effectively shut out from Twitter and those other social media platforms, you're effectively shut out from public discourse in 2022, right? It's like you don't have a voice, and I don't agree with that. So, there have been people kind of asserting that this could be the case, that the U.S. government steps in and says, okay, we can't have Elon Musk, one single person, have so much control and power over Twitter. Well, I just want to be clear. I'm not trying to defend any of that or anything Trump really did. So if I did that inadvertently or I came off that way, I apologize. I assume you're talking to someone else in the chat though. So we'll see what this Department of Justice press conference is at 1:30. I'm interested. I'd be kind of surprised if it's actually about Twitter, but that's what a lot of people are speculating. I think you can see right here, or actually no, you can't. I don't think the market is thinking the deal or the press conference is about Twitter either. Twitter's hanging out, up 2% today. I still think, as far as I did not mean to do that. That scared the hell out of me. I still think that if you were going to play the stock on either side, I would much rather be short here than long. I think, and that's not to say that I think that's not to say, I know, I don't think hate speech should be protected on any of the platforms either. And I do think specifically with the Trump situation, it was like a very sticky situation. Because at the end of the day, like the reason they did that, the reason the different social media companies ended up kicking Trump off is because of after the election still saying, okay, I won the election. And it's like, all right, at some point you do have to consider like at what point does that potentially threaten like democracy as a whole and all this stuff. Like I don't think it was an easy decision, but I think in general, and I think that's why you have like Twitter and these platforms coming back now and saying they will let Trump back on. Cause like I said, like I do think you should have some sort of protections essentially to be able to where you can't be kicked off of Twitter and shit just because they don't like what you're saying. That's my only point. That now in 2022, it is essentially pertinent to freedom of speech to be able to be on these platforms. So with that said, like we need to figure out some sort of guidelines, framework for figuring out how people can have like the right to remain on there unless they breach it in some certain way. New Twitter alternatives can still pop up. Yeah. Dude, we can also talk about that. If any sort of public company, I mean, like we can talk about Rumble. Rumble had a short report last week. I mean, all these things are the most easy short to me in the world. DWAC, Rumble, because we've talked about this before. Even if it's the best app out there and they maintain what they're saying, that they're not going to censor whatever, even the people they're going after for users on Parler, on Gab, on any of this stuff, they don't even want to be on there because it's not fun for them. It's not fun to be in on a Gab or on a true social where literally everyone has the same beliefs as you. They want to be on Twitter so they can dunk on some, they can own the libs and make some funny tweet about, or what they think is some funny tweet about, like a teacher, like you know what I'm saying? Like it becomes less fun if you don't have those people to dunk on and to get in arguments with. I mean, controversy is what drives social media, and virality on social media is the controversy. So if you create an app where everyone has the same beliefs and it's essentially there is no controversy, people are just all agreeing with each other, it's not going to be as popular. So it's not like, you have all these alternates that have popped up and Twitter all of a sudden is like bleeding conservatives. No, that's not really how it works. Again, I'm against censorship in general. And again, not trying to defend the social media companies, but like I said, I do think the social media companies were in a tricky situation in general. I mean, I think at that point, like if you have a lot of people who wholeheartedly believe as a fact, like the election went one way or was stolen, and half the people believe that's not true, and you literally can't even decide on like what's factual, what's truth or not. And by the way, all of these companies, Twitter, Facebook, you name it, have led us to this point where we are in 2022, to where like literally to where people can't agree on something that like they're like, oh shit, we created this problem. What are we gonna do about it? We created this problem solely for our bottom lines and revenue. We knew this like divisiveness and misinformation and fake news was all good. Right. And that's what I'm saying is that as someone who's against censorship, I see the hard situation those companies were in. I don't know what I would have done if I were in charge of them. I think to my point about being like against, I think it's pretty much, it was pretty telling how like they all did it at once, right? Like as soon as Twitter announced Trump was off, Facebook, YouTube, Google, like, and the fact that they all did it like that gives more credibility to the people who are talking about the problem with big tech and stuff, because they all were in line, doing the exact same thing. I don't know. We just got sidetracked talking about Twitter, and because the reason we're talking about this B9 2019 is because there's a Department of Defense or Justice, I don't even know, Department of Defense press conference at 1:30 p.m. Eastern, and some people are speculating it's going to be about Twitter, because some people have thought that the government will get involved and not let Elon Musk buy Twitter because it could be seen as like a public information or a public national security threat, I guess. I don't really know, but we can talk about Twitter stock. Twitter stock's not really moving on it, so that's why I don't think the press conference at 1:30 is going to be about Twitter at all. Just my guess. I don't think it's going to be about Twitter at all. That's why we were talking about it. TikTok ban, maybe. That could be, honestly, it could be about TikTok, which would be pretty funny. That'd be the most like 2022 thing ever, is if the Department of Justice, and it feels like that'd be like from a movie. The Department of Justice is holding the most serious national security press conference ever, and it's about TikTok. But yeah, so TikTok is a Chinese company. ByteDance runs and operates TikTok. There's been a lot of speculation for a while that that ByteDance and TikTok were collecting too much user data. It came out pretty much, I think for certain, from a Washington Post study or investigation that showed that TikTok was using data to to track like certain. I don't understand it because actually I do understand it because you would think that anyone could just come out with a copycat version of TikTok and it'd all be good. TikTok, the value in TikTok is it's not about the layout. It's not because it has so many users and so much. It's literally the algorithm. TikTok's algorithm is by far and away the premier piece of technology in any social media right now. It's it's basically all the value. TikTok's algorithm is insanely accurate to the point where you can scroll on TikTok just for a few, like you don't even need to scroll that long. You don't need to like anything. You don't even need to click on anything. But it can tell by how much time you spend on certain videos, if you rewatch that video, what you like, what you're going to be more likely to stay on. And that's why if I pick up my TikTok and you pick up someone else's TikTok, they're going to be two completely different feeds. I could see that. I'm more bold. I'm not sold on yeah, and it is kind of funny how to be fair, as far as like data collection and stuff goes, and like people get so scared because they're like, oh, it's China doing it. Like TikTok doesn't gather any information that like Twitter and Facebook whatever does. So I like it's funny that some people I think they're okay essentially with all these companies getting all this data if they're US companies, but not okay with it if it's a Chinese company. Whereas like at the end of the day, like you probably don't want the big tech companies, even if they're American companies, to like have all that data, and they're probably, not doing like the bottom line is when the companies, regardless of the US companies, again, I don't want to make any false equivalencies, so I'm not going to say that Twitter and Facebook are have the same risk as TikTok, where like TikTok, I mean, China, because of the nature of its society, how it operates, like TikTok's basically Chinese state owned at the end of the day. Like China state owns the means of production there. But at the end of the day, like Twitter, Facebook, they're not beholden to the US government. They don't care about the US government or the direction of the United States of America or the betterment of the people of the United States. They don't give a shit. They're about Twitter's bottom line and Facebook's bottom line. So if you think like, oh, it's an American company, they have our interest in mind, that's not really how it works. And that's why over time we've seen so many different US and American companies ship out high-paying U.S. jobs to, Mexico or China or whatever. Because if Ford or if whoever cared about America and U.S. people and U.S. jobs, they wouldn't have done that over the past 30 years. So, again, I'm essentially, my point is, I'm not about like the big data collection, using it for company gains, whether it's an American company or a Chinese company. Danielle Dono, market up. Market is up. I don't know if we have any exact specific news to attribute for the market being up today, other than just that the rally's kind of continuing from our lows. You can see here on the hourly chart, October 13th. So that was, when was that? 11 days ago. So about a week and a half ago. SPY was below 350. We're almost at 380 right now. We've gotten a nice, a little jump over the past couple weeks, and it's good to see. I mean, this movement, even with all these Chinese names, down so much. But yeah, we rallied last week. Looks like we're continuing to to move higher this week. I don't know how long this rally will last. It's hard to imagine any rally is able to sustain itself while the Fed is still hawkish. I think you are seeing some people are pointing to signs of whether it's inflation falling or whether it's potentially, that the Fed's going to need to stop hiking because we're inflation or our recession fears are hiking up. They're pumping the market, distracting us from chat, exposing the world's secrets. Hey, I mean, I'm down. Like I'll explore any if you want to make like conspiracy theory. Most of them are bullshit. Because I like to do that too. Like you want to give me a conspiracy theory. We can talk about it and figure out like why it's bullshit. But yeah. All pretty bad though. Other stocks moving today. How about Starbucks? Starbucks is not getting its pumpkin spice latte pump right now. Starbucks is trading down today, down more than 5% on the day. I think you gotta start looking at this on the long side at some point. You know, Starbucks isn't going anywhere. Starbucks has people have for a long time, people have kind of called for the downturn in Starbucks. It kind of reminds me of Tom Brady. I remember specifically a year in, I want to say it was like, I could probably find it if I wanted to. It was probably 2010 or something. So this was a long time ago. Say 2010. A long time ago that people, it was a Monday Night Football game. The Colts, led by Peyton Manning, beat the Patriots. And the next day, this was back in SportsCenter's heyday when I would watch SportsCenter eating my bowl of cereal before work every single day. SportsCenter that morning was saying, like, is this, the end of the Patriots dynasty? Is Tom Brady over the hump? He was probably 35 at the time or something. This was, probably 12 years ago. And he's 45 now, so maybe he was 33. I don't know. Either way, my point is I feel the same way about Starbucks. People have been calling for the collapse of Starbucks for a long time. If you guys remember, around the 08-09 financial crisis, Starbucks went through a period where they were closing a bunch of stores that it had opened throughout the mid-2000s. And Starbucks really, granted, I'm saying this as someone who was born in the 90s and I don't really remember it, but Starbucks kind of like grew, just exploded throughout the 90s and early 2000s, almost like scaring people to the point where that the growth was seen as a fad, to when there was this downturn in 07-08 and they had to close all these stores. Maybe it was even before that, because I see the stock coming down like in 04 and 05. It might have even been before the 07-08 crash that Starbucks had to come out and basically be like, oh yeah, we expanded too quickly. And had to close a bunch of stores. People were calling for the collapse of Starbucks back then, saying it was going to go bankrupt, whatever. I know, the company might have problems right now, but at the end of the day, brand recognition and brand loyalty to me goes a long, long way. And Starbucks, to me, I gotta put it up there with probably the brand of most loyal customers. I can't think of another brand off the top of my head that has a more loyal customer base than Starbucks. I mean, there are people that literally go to Starbucks and buy a $7 drink every single morning. I don't know why people would. Zed Bullish is saying Starbucks is his place of worship. He has communion there every day. Oh, wow. You guys are getting into conspiracy theories in the chat. Talking about economic forum plans for... I'm not ready to, I don't think, start taking a stab at Starbucks here. I will. It is on my watch list, though. We're currently trading at 83.70. When we were at highs in August 2021, this is an $125 stock. I like the fact that when we got down to this bottom of around $70, kind of a nice little psychological level too. We hit it twice, bounced off it. I think that's a level where investors were basically saying, yeah, I don't mind taking on the risk owning Starbucks here, $70. So if we get back down there, I'm all about it. I'm definitely going to be looking at Starbucks there. Let's see. You get a decent little dividend, 2.4%. Nothing crazy. I mean, you guys know how I feel about dividends. I never buy a stock just for its dividend. If I think a stock has a great value and maybe it's been beaten up and has good dividend. Speaking of, AT&T performing well today. Has had a good couple weeks. You can see here on the daily chart, we really just freaking taken off from about $15 to up we're about $17.50 now. But AT&T is one of those stocks where I might look at it, look at the chart, look at its valuation, look at its fundamentals, say, okay, it's trading at a less than 1 price to sales. Its forward PE is 6.8. I like its upside here. Like AT&T is not a name like a growth stock I would buy now and hold for 20 years, but it's a stock that I could look at and say, okay, it's trading at 17.5 right now. I could buy it now, hold it for 6 months, try to sell it in like the mid 20s. When a stock like that also happens to have a dividend, then that's actually kind of cool to me, because then I'm like, oh, I was already potentially looking at buying and holding that stock for a few months anyway as a swing trade, and I can get a 6.5% dividend on it. Like, then that gets me interested. I'm not ever going to see a stock and see a dividend on it and want to buy a stock just because of the dividend. Essentially, it can be an added bonus for me, but never a deal maker or something that gets me into it. If Musk fires 75% of Twitter employees, that's a lot of Starbucks orders gone. Yeah, I don't know. I mean, I don't, Twitter doesn't even have that many employees. Like, in the grand scheme of things. Let's see how many it has. I saw a tweet. I can't remember the exact point it was making or the exact numbers, but that, like, WhatsApp's volume in terms of data, like, transmitted in a day on WhatsApp versus Twitter just absolutely is insane compared to Twitter's. Like, does way more volume in a day and has like way less employees than Twitter does. I do think there's a difference in terms of like how much do you really need to upkeep people just messaging each other back and forth on WhatsApp versus on Twitter being able to upkeep like the servers and this and that and Twitter Spaces and that, you know, I don't know. All right, guys, quick agenda rundown for the rest of the show. I see our first guests hanging out. We've got Ben and Dylan from Peakbot, a really cool startup that's kind of bringing some trading algos to retail investing. Something that has long, basically since its existence, algorithmic trading and quant trading has been reserved for, you know, only the biggest hedge funds and the richest on Wall Street. And Peakbot is trying to kind of change that by bringing it to retail investing. We're going to talk to them about that. So I'm really excited for that interview. 12:35 might have a special appearance from someone here in the BZ office. AB, it's St. Arbucks. Oh, I see what you're saying. Starbucks, but St. Arbucks. But yeah, guys, 12:16 now. So without further ado, if I get a thumbs up from Ben and Dylan, if they're ready in the background, we'll go ahead and give them our special intro. Bring them on the show. Ben, Dylan, how's it going? Welcome to Benzinga Live.
Hey there, Aaron. How are you doing?
What's going on, Aaron? Thanks for having us.
Of course. Thanks for hopping on. I'm doing well. So before we get started, I'm going to turn it over to you guys, or Ben, just why don't you give us just a brief introduction, kind of the elevator pitch, 60 seconds on what Peakbot is, what it is you guys do.
Yeah, absolutely. I mean, you kind of summed it up well. We're taking algorithms and bringing them to the everyday trader. So historically speaking, you know, the stock market is traded on algorithms. Large institutions, hedge funds use algorithms. We're now taking that ability and the power to do that and putting it in the hands of the everyday retail trader. And our mission here is really to make it as affordable as possible for the everyday user. We want to level that playing field. We want, you know, everybody to have the ability to use a piece of technology that can now be available to everybody.
So my first question, Ben, is I imagine, granted, I don't know too much about the algorithmic trading world, quant trading, but from what I understand and what I assume is that a lot of these, you know, quant firms and hedge funds that are utilizing algorithmic trading strategies are able to be profitable because they're doing it on such a large scale, meaning that they're making probably like a little bit of money per trade, but they're doing it at such a large scale they end up making a lot of money.
Right.
How does that work in the retail sense, right? Like my retail account's not going to have as big of a assets under management as Renaissance. So how can I make actual money using an algorithm?
Totally, and it's a great point. So what you're referring to is probably high frequency trading, where hedge funds are trying to make just a couple of points off of each trade. What we're doing is we're taking strategies that people might be executing manually. You were just talking about swing trading AT&T and picking up a dividend every now and then.
Yeah, what do you think about that, by the way?
I'm swing trading AT&T right now as well. I'm actually using Peakbot. I'm using Peakbot to sell cash secured puts. And then if I get assigned a position, I'm going to just switch over to selling covered calls. That's the wheel strategy. And then I'm going to collect the dividend along the way. That's actually one of our strategies that we are automating. So it actually folds in really well. So that's a real life use case where I'm trading the wheel strategy using our automation to trade AT&T. I'm making money on premiums. I'm collecting dividends. That's just going to keep flowing in the background as I go about my everyday work.
That's awesome.
Yeah. But to answer your question, really the aim is to take these more popular and well-known strategies that we could be trading manually and just take all of the human element out of it. When we look at what we have available now, we have what's called our momentum-based bot. So we're looking at technical indicators, so MACD, RSI, moving averages. You as a trader might be looking at a chart and determine there's a stock that's on an uptrend, and you might want to trade that. And that's essentially what this bot is doing. So we're not trying to do anything, high frequency. We're not including any sort of artificial intelligence, not yet at least. We're really focusing in on the basics of trading. What are those basic trading strategies? And we're automating it. We're taking the human element out. We're giving people their time back. And people are getting the sense of, hey, this technology is now available to me.
Yeah, and Aaron, if you don't mind, first of all, thanks again for having us. Just to add to Ben's point, really, Aaron, what it boils down to is exactly what Ben's saying, right? We're trying to save you time and money while eliminating fear and greed, right? By taking your emotion out of it. So really what we're doing here is we're just bridging that gap. And one of our main focuses is really trying to provide the simplest, most cohesive user experience, right? With virtually no barrier to entry to where anybody can do this, both the active trader and the new trader as well. Just want to throw that out there.
Yeah, no, thanks, Dylan, for clarifying that. I've seen some good questions flying in the chat. I don't know if I thought this was about but he says locations. Are the algorithms, like if I signed up for the Peakbot algorithm, do I like get to see what it is, or is it proprietary to the point where like you don't really know what you're investing in or how the algorithm is investing your money?
Great question. So, I mean, the actual code you won't get to see.
Right, I'd imagine.
But you will get to see all of the indicators that we're using. And we actually just made a decision over the past couple of weeks that we're going to start publicizing anonymously, but we're going to start publicizing all of our users' results just for the sake of transparency. We really want to, we realize that we are sort of a done for you platform. So somebody comes on, they use our algorithms. There's not many configurations they have to go through, and they kind of just have to trust it. So in order to combat that, question of should I trust this platform, we said, hey, take a look at our results, take a look at what people are doing, and decide if this is for you. It's not for everybody, and that's fine. But algorithmic trading is here. It's here for the retail user. We see it in the form of signal providers. We see it in the form of build your own bots. We see it in the form of done for you, which is kind of the format that we fit into. Algorithmic trading is here, and we want to be the company to make it as easy for anybody to join, and we want to be as transparent as possible to increase that trust factor, because that's so important here.
Yeah, and Aaron, the point we're really trying to get across is that The fact that, this is hands-free trading, right? That's kind of the hashtag we've run with, but that's exactly it, right? You can look at our content, and really what we're trying to showcase is whether you are an active trader and you're staring at a stock chart all day and that is the way you provide your income, fantastic. No reason you shouldn't have Peakbot running in the background, but for the average everyday person who has the 9-to-5 job, is taking care of the kids, taking care of family, running around like crazy, right? This is a stock trader in your pocket. And I think what's important to know, Aaron, is that we are integrated with TD Ameritrade. So the largest retail broker, that's where our bots are actually executing the trade on your behalf, right? So it's not alerting you when it's time to buy or sell, which is fantastic, right? That's great, but right, Aaron, that's really only the first half of the equation. That alert is only as good as your response time. So what we're doing is trying to say, hey, you don't have to be attached to your phone, distracted at work. The trade's going to be executed on your behalf through your broker that you already have an existing account.
Yeah, and I think what's so cool, and you answered one of my next questions, Dylan, about where you said TD Ameritrade is kind of where. I didn't know if essentially someone, I'm sure you're working on more integrations beyond just TD Ameritrade, but if someone could use Peakbot no matter where they're trading stocks or what it is. So you answered that question for me. But like you said, what I think is so cool about this is it might be something that's really cool for someone who is pretty active when it comes to trading, but maybe you can't for the next couple months, but you don't want your portfolio to just be stagnant. You don't want to just be sitting in cash. So it's like, okay, I'm not going to have as much time to trade over the next couple months here. I'm gonna let the Peakbot algo do it, and then I'll still be checking in on it, but it's not going to take as much up of my time as I was when I was, had more time to be day trading all day, essentially.
Yeah. Go ahead, Ben. Sorry.
Yeah. And you know what, Aaron, we actually just did a quick study for Voice of Customer. So we went back and we talked to some of our traders and we said, hey, why Peakbot? And Dylan, I know you've got some results on deck here. You want to just read through some of the whys that we received from our users?
Yeah, absolutely. And thanks for mentioning that, Ben. What we've noticed, Aaron, and anybody listening, is that the search was on for this, right? There are individuals who were already looking to automate their stock trading. What they found is a lot of times that's really already happening in crypto. You see a lot of futures, maybe some Forex. However, people were, the lone soldier, boring old stock equities. Everybody was figuring out, hey, how do we automate that, right? And so whether it's, we have a subscriber who's a pilot, they're traveling 17 days of the month, going in and out of time zones. They can't possibly manage their day or swing trading. Just taking a look at some of the others is people wanted to take their emotions out of trading, right? That's the biggest error everybody makes. Fear and greed gets in the way. Others are almost treating it as an experiment, right? Because it is relatively low risk here. I think it's important to mention, Aaron, that we're really trying to provide this for the everyday individual. The way we price this is a subscription model, and it costs $60 quarterly for our tier one subscription. So again, not to be too salesy here, but the idea is that we really want to be able to bring this to everybody. And if you wanted me to, Aaron, I can feel free to share my screen and show you.
Yeah. You should have
looks like. Okay, fantastic.
A button down there on the bottom. I've found it's weirder to share like a specific tab or window.
Okay.
Rather than your whole screen.
Sure. Let me see what I can do.
We're getting some different questions in the chat. B9 2019 says he loves this idea. Someone's asking what does it cost to subscribe. I think you just answered that. Urban Farms is asking minimum invest. Can you start with like 2K or 5K?
Yeah, we can take that last question, Dylan, while you pull that up. So minimum amount to invest, it's up to you ultimately to choose the stocks and the amount that you want to invest into each stock. However, we do recommend at least over $2,000 in your trading account, just so that way we can utilize margin. We're not necessarily going to trade with margin, but we want to be able to recycle that money. If you're not trading with margin, just for anybody that might not know, you have to wait a couple of days for your cash to clear before you can reuse it after exiting a position. So while Peakbot might be executing a trade, 2 or 3 times a week, if we have to wait for your cash to clear, then we won't be able to execute as many trades as we might have liked. So that's why we use margin. We usually tell people, hey, put $2,500 into a TD account, try it out. We do offer 2 weeks for free, so get the feel for it, and see if you like it.
Yeah,
So,
and I know. Oh yeah, Dylan, you want me to go ahead and pop your screen up?
Completely up to you. Happy to answer questions before we do so. You are the host.
No, I just wanted to make sure. I didn't want to like pop your screen up and you have.
Yeah, I think I'm ready.
Account details on there, or how much you have in your brokerage account. I don't know. So I've done that before, so I don't want to repeat the same mistakes.
I've done that before myself. What I'm showing here is all kosher. I think we're good to go.
All right, beautiful. Yeah, so this is just on the app.usepeakbot.com. I can go ahead and drop that link in the chat as well.
Fantastic. Yeah, and if you guys, Aaron, can you see my screen successfully?
Yeah.
I can see it.
Okay. I want to make sure that I'm respectful of our time here, but basically what I wanted to show you, Aaron, is that, yes, this is the home screen. So it is a web-based app. This is not going to be found in an app store just yet, but it is mobile friendly. This is something you're able to save to your home screen. So what you're seeing here, again, keep in mind, we're integrated with TD Ameritrade. So although you see our active budget here for what's activated for our bots, AKA algorithms, strategies, whatever you want to call it, note that nothing's ever leaving your broker account. Just know that we're integrated with your TD Ameritrade account in here. So what you can see here is this is our portfolio, right? So in this specific account, I only have 6 stocks activated. But if I wanted to show you really where the magic happens, the whole idea, as I mentioned earlier, Aaron, is the simplest user experience, right? You know, say what you want about, everybody has their opinions on, you know, Robinhood, but really what we're doing is we're taking the Robinhood approach to automated trading. So in 3 clicks, we want you to be able to come in here, choose your bot, right, which is you would subscribe to on a quarterly basis at a low cost. Select your stocks. Aaron, you were talking about Starbucks and AT&T earlier, right?
Yep.
So if I can come in here, I can search Starbucks. You can also search AT&T. You can search it by the ticker or the name of the business. If I wanted to add both of these here, I can enter my budget. Now, note that we do cap you. There's actually a capital allocation limit per stock. That changes per tier. We do that for a couple reasons. A, of course, we want you to diversify. Look, right, you know, we're no golden bullet. If you come in here and pick bad stocks at a bad time, you're probably going to lose. Hopefully you lost less because Peakbot got you out of Dodge. But the whole idea is to diversify. So without running on, you see I hit activate there, and now you'll see that my active budget jumped up and that those stocks were now added into my portfolio here. And you can see active, which means that the bot is now actively scanning the market for a buy or sell.
Did you actually just do that?
Yeah, that's. I hope you said those were on your watch list, so I'm taking your word for it. That's live. That's going to happen. So if I was to keep these on here, my bot most likely is going to find, you know, over either today or the next few days, an opportunity to buy, and I'm going to be notified.
Yeah, just so we're clear, I said I was waiting on Starbucks a little bit, but I was on my watch list.
So good point, Aaron, and interrupt me here if you'd like, but I'll just show you something really quick. Of course, we have to give the trader the full autonomy and control over their positions, right? We're not financial advisors. Let me just, you know, put something up on the bottom of the screen. It's not financial advice. We do provide watch lists, right, to do as much hand holding as possible. But just to show you, if you wanted to get out of these positions, you can check these boxes and then hit edit status, and you'll be given the option to pause the position, right? So for whatever reason you didn't want it to buy, or maybe you didn't want it to sell, your bot now knows not to. You can come in and resume that. And let's say you wanted to, you know, maybe you've been on Starbucks for a few months and you're kind of done with it, or AT&T as well, and you want to just remove it after your next sell order, you can hit smart exit, and that's going to know, hey, get me out of this position and don't get me back in.
Yeah, I mean, wow, so I connected with Ben on the phone last week, and we talked, and I was, you know, like, I'm always interested in getting new, different startups, and, like, you know, you guys are younger people trying to make shit happen in the finance world. Like, I'm always down to tell these stories. I had no clue, essentially, like, what this all entailed, and I'm thoroughly impressed and interested myself. Really cool shit you guys are building and doing over here. I'm impressed.
Thank you.
Thank you. I really appreciate that. I can stop sharing unless, of course, there was anything else you wanted to see. Happy to pop it back up. Happy to answer any questions. But I just wanted to show you, this is the bot shop. This is where the individual would come and actually subscribe to a strategy. And again, this is where we try to provide as much information as humanly possible, right? Without sharing the thousands of lines of code. And then we can share our back test. Obviously the nice thing about this is we're able to back test. I won't say unlimited amounts, but this is our.
I'm curious about the decision essentially, like because I'm sure, like, was the idea always to allow users to select certain stocks and then to have the algorithm essentially go to town on those certain stocks, or was it ever just like, okay, invest X amount of money, now we're using our Peakbot algorithm and it's going to do what it does and you have no say in where it's going?
Yeah. Ben, I can make a quick comment on this. One thing I think that's important to know, Aaron, is yes, to answer your question, our bot, like as you saw there, if the stock is in that portfolio, our bot, at least that bot, which is called Momentum, it's a momentum-based swing trading equities, right? So not options or anything else, which we have coming in the pipeline. But our bot is going to actively swing trade that stock until you remove it, like I showed you. So for example, you might trade Starbucks 22 times over the next quarter, hoping that, you win 12 or 13 of those trades and you get out. And this is not a get rich quick thing, right? Very important to know. This is not like, hey, let's just go dump all of our money into 2 stocks and see what happens. We just want the active trader or the retail trader to be able to make smart trades without having to be locked to their computer screen.
Mm-hmm.
Yeah. So is there a way I could use Peakbot essentially without wanting to even like do my own selection of stocks, or would I just want to do it then, like, all right, select like the S&P 500, then use the same strategy, or how would that work?
Right. As of right now, I mean, we're not registered investment advisors, financial advisors of any kind. So we leave the stock picking up to the user, and we've actually had good feedback on that. People get a sense of pride when, even by choosing a good stock and then seeing it perform well. However, like Dylan mentioned, we do offer a watch list. Like, we do want to be there for handholding wherever it might be needed. And that watch list is available on our website. Just use peakbot.com, not in this specific app. So you can see what we're trading. That watch list is, we have a third co-founder on here, Dalton, who's he's actively trading that account, or those stocks on his account at all times. So we have that resource, but as of right now, yeah, it's, you pick the stock, we make the trades.
Yeah, and I'm sure eventually, like, that makes sense, I guess, from like a regulatory standpoint, why it's like essentially easier to do that now, and then down the road, like you're saying, kind of having both options for people who maybe want to have more of a say in what they have in their portfolio versus some of those people who might be like, oh, it's the reason I'm paying you guys. I don't want to, I don't want to do it.
Right.
And Ben and Dylan, without getting too much into obviously like the details of the algos and stuff, did you mention earlier, Ben, that kind of that wheel strategy you mentioned was kind of being employed by one of these bots?
Yeah. So right now we have 3 bots in testing. So my account is mainly used for testing. We have the wheel strategy, which is an options-based strategy. We have the iron condor strategy, which is another options-based strategy. And then we have an equities-based strategy for dollar cost averaging. So almost like the momentum bot that we have now, except we'll have multiple entries before we actually make an exit. So that way we get to that dollar cost averaged position.
Yeah. Wow. And how does that work in terms of actually like building these different, like, is it like one of you guys is kind of in charge of that and the other 2 are hands off, or is it something that you guys are all like collaborating on together?
Yeah, Dylan's giving you this motion. He doesn't do any of that. But it's myself and our co-founder, Dalton. I've been trading for 11 years. I have somewhat of a financial background. Dalton also has a financial background, been trading for a similar amount of time. And like I said, we're not trying to make any crazy claims here. Say our bots are going to make you 50% overnight. Like, what we're doing is we're taking these commonly used trading strategies and we're automating them. Again, going back to that whole transparency piece, we don't want anybody to come into Peakbot thinking that they're getting some piece of like unheard of technology that's going to change the way that they invest. That's not the point. And I would encourage people, to the extent that you're capable, try making your own algorithms. Like there's, becoming more and more tools available to everyday people, so that way you can. But when you decide you don't want to, Peakbot's here for you.
Yeah. I'm seeing Jose's asking a couple questions in the chat. Does this only work as TD as a brokerage? I think we answered that.
For now,
Right now, yes.
Yeah, so Jose, for right now, you got to have TD. How do you know if Peakbot's trade ended profitable or if it was a loss? So wait, before you answer it, correct me if I'm wrong. The trade only ends if you end it, right?
Not necessarily. So the trade itself, like for example, a sell order, right? The bot's going to sell for you unless you remove it. Unless you go into the Peakbot app and remove that stock from your portfolio, it's most likely going to in the next day or two or three or four going to buy again, right? So and to answer Jose's question, everything is integrated with TD. So all your results, all your orders, all your charts, everything is available in your TD Ameritrade account. And also something we failed to mention here, Aaron, any Peakbot subscriber, any trader with us gets an email every weekend with their results. Again, sake of transparency, right? Hey, Jose, Peakbot executed 64 trades on your behalf this week. Here were the stocks that you traded, and here was your average return per trade, right? So we're giving you every piece of information, not to mention we're giving the other traders that information. We're keeping your name anonymous, but somebody in the tank might say, hey, user number 71's been at the top of the leaderboard 4 weeks in a row. What are they doing? Let me give that a look, right? So I wanted to share that as well.
What about, do you guys have any, oh, sorry. I just realized I was pronouncing Josue's name wrong.
Sorry about that, Jose.
Do you guys have any competitors? Is there anyone else trying to bring trading algos to retails?
Yeah, there's definitely competitors, and you could view our competitors in different boxes. So there's the done for you, which is the box that we fit in. So you kind of just log in, you kind of mess around, you pick the stocks that you want, set some configurations, and you're on your way. There's a handful of signal providers out in the market. So they'll tell you when to buy or sell based on their algorithms, but they won't actually execute the trades for you. So you still got to be, locked onto your computer, your phone. You got to be ready to make that trade. There's the build your own bot websites where, with low code, you can build your own bot. Not necessarily the most flexible, but it is possible. And then there's some bot marketplaces where you've got contributors like myself and Dalton, people who make these bots but don't have a platform of their own, and they make it available for other traders. So there's kind of these different groupings. And again, everybody's got a different preference. Where we sit, like I said, the done for you space, what we found there is that competition is really offering solutions that are complicated. And that's, Dylan kind of mentioned it before. We're taking the Robinhood approach here. And what we mean by that is we want this process to be so simple for the user. We want to provide the best customer experience. And Dylan showed it, you've got 3 fields to fill out, and you're often trading a bot. While our competitors, you might have to fill out 8, 9, 10 different fields that you might not even know what exactly those settings are doing for you, right? So we're trying to take as much of the guesswork out as we can.
Yeah. And again, I think that's an incredible idea. I think a lot of people in the chat are agreeing, which is, well, I'd be surprised, I guess, if it was such a great idea and there weren't any competitors. So it shows you're on the right track, right? That other people are trying to do something similar. So one thing you guys mentioned kind of at the top, that as far as the strategies, or like you said, you're not trying to reinvent the wheel. I guess pun intended, talking about with the wheel strategy. But you're not trying to reinvent any crazy trading strategies, not trying to make anyone 50% overnight, just these kind of common trading strategies, but automating them. How would you guys, are you guys putting like resources to building more like complex algorithms, or more so like, all right, let's get our feet off the ground with these simple ones first before we even start thinking about trying to build more like complex algorithms, whatever?
Yeah, great question. And that's definitely on the roadmap. However, we have to be thoughtful on how this would affect a particular stock, for example. Because let's say we have 1,000 users all trading the same stock at the same time, using some sort of AI, we would assume that position would, all those users would enter at the same time. So that could create some movement in the market that might not be desirable. So we definitely have to think through how that would affect the market. I think right now, at least for the short term, we do want to stick to these more simple strategies. We want, like we said, algorithmic trading is here for the retail trader. But for all those new traders, and I know Dylan had some notes on pop culture that maybe we could talk about if we have time. But there's a lot of new traders, especially since COVID happened, the big market dip there, the market pop. We had GameStop, AMC. That got a lot of new people involved, and they might not be as familiar with algorithmic trading. So we want to be here for those guys. We want to be here as the simple platform to get people introduced to the world of algorithmic trading.
Yeah. Hold on one sec. Just catching up on the chat real quick. No, 100%, Ben. I think it's just great idea what you guys are doing. Excited to see someone doing it, someone bringing algorithmic trading to retail investor, because I've always wanted to have like exposure to that space, never been able to. Now I can. So Dylan, I know we have a coupon code for Zinger Nation for our Benzinga listeners out there.
Yeah, we do actually. Ben, correct me if I'm wrong. Is the code just Benzinga in all caps?
All caps, Benzinga. That'll get you 20% off of a quarterly subscription. So our tier 1 quarterly is $60. But right now we're offering a 2-week free trial for a limited time. So no credit card even needed.
Hell yes.
Yeah, just hop on, integrate, and you're good to go.
Free 2-week trial, no credit card needed. So really no reason not to try it out, especially if you already have a TD account. And then again, 20% off quarterly subscription using the code Benzinga. I'll go ahead and drop that link to the site one more time in the chat, app.use Peakbot. But Dylan, Ben, thanks for coming on. It was great to learn more about the company. I'm excited to now have you guys in my kind of arsenal of people I can reach out to for experts in the algo trading world. And I'm sure, you guys are welcome on the show anytime. If you guys ever have updates, a new bot launching or something you want to come on and talk about, we'd love to have you.
Awesome.
Aaron, clear your schedule for next month. No, I'm just kidding. Thank you so much for having us, Aaron. We really appreciate the time. This has been really exciting for us and our team, and our other co-founder, Dalton, who's not here on the call. But again, we're really just here to educate, automate, and elevate. And for all the listeners out there, we love our phrase of "see you at the peak." So hopefully see you guys.
Those are two great little slogans you got there. What was it? Automate,
educate, because that's most important, right? Educate, automate, elevate, see you at the peak.
I love that. That's amazing. Jay Rice, last question, is asking, do you have to segregate from your other TD account?
Good question. Ben, maybe you can take that.
Yeah, depends. If you want to just have an automated account, then create a separate account. I personally do my trading manually and automated in the same account because Peakbot tells me how my automations are doing. So I don't segregate. However, you certainly could.
Beautiful. Well, Ben, Dylan, thanks again for hopping on the show. Looking forward to catching up with you guys soon. Enjoy the rest of your Monday and have a great week.
Thanks so much, Aaron.
Have a good one. Thank you.
All right, guys, that was Ben and Dylan from Peakbot. Again, I'm going to drop that link in the chat one more time. There it is, app.use Peakbot. Really cool startup trying to bring algorithmic trading to retail investing. I'm just proud that I said algorithmic correctly. But yeah, guys, again, really cool company, what they're doing there. I'm honestly, I might throw some money in there and just let it run for a little bit just to try it out. There's really no reason not to. Because like I said, like I go through waves where I have more time sometimes to manage my positions, to trade, yada yada, and then sometimes where it's like, no, I'm busy with work and social stuff and whatnot, and I don't have time to look at my portfolio. But in those times where I don't have time to look at it, I don't want to just be sitting in all cash or not being able to have any positions. So I really like what Ben and Dylan are doing over there. I have a feeling we're going to be hearing more about Peakbot as we head into the future. Maybe make some moves there. How about Snapchat, guys? Up 8.7% today. I don't know what is this? Is this just people buying the dip, saying, "Hey, this thing's so low"? I mean, nothing in that report last week was good that would make people want to be buying it. What's going on with Snap stock today? If we get where's our whims at? You get a whim on Snap? Oh, here we do have a whim on Snap. Snap shares are trading higher, potentially rebounding following recent weakness after the company reported Q3 financial results. Let's take a look at some of the other companies gearing up to report this week. Of course, you have Microsoft getting ready for tomorrow. After hours, Microsoft trading at $246 a share roughly. We can go back and look how this thing has performed the past few earnings reports. I remain where I've been on Microsoft and basically all the big tech names. I think we've gotten down to really the first time since COVID that these companies are at realistic valuations in terms of like, yeah, it makes sense looking at Microsoft with a price to sales of 9 and a forward PE of 24. Like, all right, like it's not like insanely expensive. I remember when we were close to highs in 2020 in terms of the market, we had been at historic highs in terms of PE, like price to earnings for the S&P 500 compared to historic averages. And now we are getting back closer to those historic averages versus 2020. We were talking about, okay, this is the highest average PE in S&P 500 since 2000. It's like, all right, that's not probably a good sign. So yeah, Jim Cruz is asking about Google in the chat as well. Again, all these big tech names, for me, have gotten to a point where they're reasonably valued. Now, does that mean their growth that we've seen in Google from, the year 2000 to 2020 is going to be there? Probably not. Google's probably done growing at that incredible rate that it was for that long. Doesn't mean it's not going to be a decent investment or it can't be a decent investment. I mean, a company like Google is still growing and still makes a shit ton of money every single quarter. So I don't mind adding positions to some of these big name tech companies. I think you're fooling yourself if you're expecting Google, Apple, and Microsoft to really, really grow at the rate that they have been the past 20 years or so. But that's still that doesn't mean, that's not to say there isn't going to be growth there. That's not to say it's not going to be worth owning these stocks. AB, it's basic algorithmic. Well, that's why I was always good at my 3 R's, reading, writing, and arithmetic. Google. All right, so we checked Google, Microsoft. How about Apple? Here's the thing. I'm not bullish Apple into earnings for one of like the first times in a while. Apple loves earnings. Apple is an earnings blank. I'm not going to say it, bad word on the show, but it is. I'm not bullish Apple into earnings. I'm not really bearish either, because here's the thing. I don't expect the numbers to be great for Apple. I don't know how much, like, I'll make a bold prediction for Apple. Apple doesn't report till Thursday, by the way. So Apple's going to move based on what like Amazon and, or Amazon might report the same day. Who reports tomorrow? Is it Microsoft and Google? Yeah, Microsoft and Google tomorrow, Apple and Amazon together on Thursday. Here's the thing with Apple. I'm going to make a bold prediction for Thursday. Again, this is not investment or advice or anything like that. In fact, if you're investing based off my bold prediction for Apple's earnings on Thursday, you deserve to lose all your money. Here's what I'll say. Here's my prediction for Apple on Thursday. I think the quarter is not going to be great in terms of numbers. I'm gonna guess. I'll get more specific with it. I'm gonna guess mixed bag like Tesla's. I'm gonna guess Apple misses on revenue, beats on EPS slightly. Typically, I think a report like that for Apple would slide the stock down like 5 to 6 to 7 to 8 to maybe even 10%. I don't think that's what we're gonna see. I think we're gonna see a report that would usually bring Apple's stock down a lot, and I think it will go down, and that it will end up relatively flat. Like, it'll be a bad report, and then Apple will open the next day down 1.5%, 2%. In basically showing me that the market had pretty accurately priced in the headwinds Apple's dealing with, showing that, yeah, the quarter wasn't great, but guess what? We expected the quarter not to be great. That's why Apple's trading down here at $148. So that's my bold prediction for Apple's earnings. So the report's not going to be great, but the stock is not going to get absolutely hammered by it because there's this kind of built-in, priced-in expectation that the quarter's not going to be great. And again, for Apple and for all the other big tech companies reporting this week, what they report for Q3, whatever, is going to be important, but it's going to be way more important what the companies say in terms of future outlook and guidance. And what we've seen is across the board, a majority of companies that have reported so far this quarter, or so far, the past couple of quarters, have been very conservative in terms of offering guidance. Some of them have even pulled guidance off, saying we're not going to offer any guidance for the next year because we don't really know what 2023 is going to look like. And I could see Apple and some of the other even bigger names saying something like that, saying like, yeah, we're doing decent right now, but demand for MacBooks and iPhones could be down this holiday season, or we don't really know, essentially. So, again, if you wanted a bold prediction on Apple for earnings, that's my prediction. Stock down, but relatively flat after a mixed earnings report. We can go back on Friday and revisit this prediction, see how it is. AB perfection. I mean, I can be wrong a lot of times, but even a blind squirrel is right twice a day, as we like to say. From how about the new speaking of a blind squirrel is right twice a day. I don't know if anyone in the chat, let me know what that's from. Activision Blizzard. It looks like the market's not very bullish. This deal's going through. So Activision Blizzard, the deal was announced with Microsoft. Microsoft was buying out. I believe the buyout price, if memory serves me correct, is 80. Can someone fact check this for me? Hey, Jamie. Activision buyout share price. I want to say it's 80. $95 a share. Wow. Thanks, Jamie. $95 a share. So when the deal was announced, the stock hopped all the way up to 86. So even there, from 86 to 95, there was a decent little arbitrage trade if you thought the deal was for sure going through. We're down to $72 on it now, which is, if you think about it, what is that? 22% from 72 to 95. Mr. Market's saying the deal's not going through. What? Yeah, you butchered that quote. No, the quote, a blind squirrel is right twice a day. I get it. It's the two quotes combined together, but it's from Modern Warfare 2, Andy O. If you I don't know who this guy is. I don't know. He's probably never played a video game in his life. But it's a quote from a Call of Duty. So I actually didn't butcher it. I actually got it perfectly right because I was referencing Call of Duty, which is then why I brought up Activision. Either way, I don't know. I haven't been following this deal. Maybe we have to get a. I wish we could get like Matt. Maybe I'll reach out to Matt Levine. You never know. Some of these guys. Here's the thing with some of these guys like Matt Levine, who's he works for Bloomberg and he's like the biggest reporter on mergers and acquisitions. He was a lawyer for a long time in M&As, so he knows what he's talking about. He's been reporting a lot on the Twitter Musk deal. A lot of times, like those guys like that are like big names, you know, he's got a few 100,000 followers on Twitter. They're like like they like to come on to random shows like this and talk for 5-10 minutes. So I will reach out to him and see what he yeah, SMH, Andy. Where? SMH, are you saying you like semiconductors here? But going back to Activision, I don't know what is going on with the Activision deal, like why it's trading so low, but Activision is getting ready to release a new Warzone, a new Call of Duty, so if that does well, maybe that's good for the stock, even while the deal's going on. I don't know. You can't, to me, there's no, maybe it's a similar situation to where like Microsoft is saying, oh, wow, we really bid on Activision at the wrong time. And they're trying to like find a way to get out of it. And Activision has a very maligned company history. So I'm sure there are ways or things that Microsoft could point out to try to get out of the deal. But there's not really an antitrust argument to be made. I mean, think about it. Microsoft has its own like market share in the video game world where it has like Xboxes and stuff, but has clear competitors in terms of Sony, Oculus, right? It's not like Microsoft's only game or show in town in terms of consoles. And then you have Activision, who makes Call of Duty. There are a million game studios out. Like there's, to me, there's no antitrust argument. I would have to, to me, there has to be something going on with this deal starting in like August, where again, maybe it's Microsoft getting cold feet and trying to figure out there's a way to get out of it. No, I think it has to do with COD. There were rumors saying Xbox only leaving Call of Duty on PlayStation for 2 more years, then making it most popular game going exclusive. I get that, but I think I don't know, and I'm not a legal expert. I don't even know that much about antitrust laws or anything. I would think that'd be I think that'd be overreaching, because the assumption would be that there's like not competition in other war games, and then that PlayStation couldn't come out and put out their own exclusive war game. And we talked about what the Sony's raising a lot of hell about the deal. All right, so you guys are right. I guess that Sony's basically knows that if Microsoft takes Call of Duty private, although I mean I don't know, it seems like Call of Duty hasn't even been as popular as it has been the past like 6 months or so. But I always thought what was going to happen was Microsoft would leave like the free games, like the Warzones and stuff, as free, as like not exclusive, because think about it, that you're getting all these users on like mobile and PlayStation and shit too for your game, which is good if you now own Activision, but then make like the actual game exclusive. All right, you guys are enlightening me, Melanie and Andy. I will do my own research on the deal, see the new updates on it, because it sounds like both things. Microsoft might be trying to renegotiate. Sony might be trying to get the deal not to go through. I will. Yeah, they based that deal on original price during the metaverse craze. Like I said, I'm going to reach out to Matt Levine. If I can't get him, I'll try to get a different merger and acquisition expert. We can go through the Activision deal and the Twitter deal same time. All right, guys, it is 1:02, which means it's time for me to shepherd you guys over to Money Mitch, Stock Market Movers. Mitch has a fantastic show coming up. We also have that 1:30 p.m. press conference. Again, that could be about Twitter. I'm betting that's about TikTok. That's my bet, is that this 1:30 Department of Defense press conference is about TikTok. I think that would be a perfect kind of encapsulation for 2022 politics and our world and society, is that we have to have like a super serious Department of Defense press conference and it's about TikTok. Like it feels like it's from a TV show. But if that ends up happening, it'll be pretty funny. Mitch is going to be also talking to Spruce Point Capital founder Ben Axler at 145. So big deal there. Spruce Capital 145. Smash the like if you guys have not already. Buglog, what are your thoughts on Mullen? Pass. Sell, sell, sell. Not financial advice. Love you guys. We'll be back tomorrow. Peace.
This is Ben